And welcome to another episode of the Capital Gains Tax Solutions Podcast, where we believe most high net worth individuals and those who help them they struggle with clarifying their capital gains tax deferral options, not having a clear plan is the enemy. Using a proven tax deferral strategy, such as the Deferred Sales Trust, is the best way for you to sell your high-end primary home, luxury real estate, cryptocurrency, and defer the capital gains tax so you can create and preserve more wealth. I'm your host, Brett Swarts. Each episode, I'm joined by some of the best real estate, financial, wealth, and business minds in the world, where they share their ideas, deal stories, and inspiration. So together, we can make complex tax deferral strategies simple and passive income plans achievable. I'm excited about our next guest. She's a strategic partner, and she is in the Lake Tahoe and Truckee area of California. And she specializes in high-end homes and all things real estate, and she invested in herself with her husband. And she's here to talk about with me a little bit about deferring capital gains taxes and getting some freedom from capital gains taxes for anyone if you're looking to sell in Truckee or Tahoe area. So please welcome to the show with me, Rebecca Monson. Rebecca, how you doing?
I'm great, Brett. How are you?
I'm doing fantastic. Excited to dive into this topic. So for our listeners, get to know you for the first time, maybe just give them a little bit about your background and your focus right now.
Sure. So I've been in the real estate market in the Tahoe Truckee area for over 20 years now. Specialize in luxury real estate, primary homes, second homes, doing everything you can, and just love working with sellers to get their homes sold just as quick as possible these days.
Perfect. We have all these fires going on, right? And
Yeah.
new challenges with Airbnb laws kind of potentially limiting new investors and new folks, and a lot of headwinds and challenges with the housing crisis. But for our listeners who aren't familiar with what's going on, maybe kind of give them a snapshot of what you're seeing right now.
So we're seeing Placer County specifically considering putting a moratorium on short-term rental licenses. So existing homes that have short-term rental licenses can renew, but they've put a moratorium on new licenses being issued for short-term rentals. So that's put a pretty big dent in the real estate market, and we're just dealing with it as it comes along.
Yeah, and so just to kind of bring that a little more to light here. So essentially, people who are Airbnb now or looks like to be grandfathered in, but they're putting a moratorium on new investors that are buying properties, or even just someone who's owned properties and are applying for the Airbnb license. And part of that challenge, Rebecca, and I think we were talking about this before the show, is the fact that there's the work, let's say the blue collar workers in the area, they're getting priced out of the market in housing.
Exactly.
And then you have developers who are developing, 3 and 4 bedroom units, which typically are going to draw a higher price, right? Or more of an investor, or more of an Airbnb thing. And so you have a lot of people who come and tour the place, but then you have the folks that need to live and work. And so there's just this challenge, right? All of this housing crisis. Anything else on that?
Yeah, so there's a big gap between what our the workforce needs versus what we're seeing that's available inventory. Not a lot of inventory, so anything really in the $500,000 price range or below, there really is a lack of inventory these days. So on the higher end side, definitely more opportunity, but that's not what the workforce needs. The workforce needs 1-bedroom and 2-bedroom apartments being built. And then those people that are looking at purchasing investment property, there is that challenge for getting those Airbnb short-term rental licenses. So people that bought 6 months ago, they're having a heck of a time trying to get those.
Yeah, that's a big challenge. And then from the developer standpoint, right, they don't make as much money, or they can't underwrite it and make the sense of the numbers if they're building 1 and 2 bedroom units, right? Because it just doesn't pencil. So they're making 3s and 4s. So it's a problem, right? So the affordability. So California, if you hear us, how can we make it more streamlined for the developer to create more affordable housing? And how can we make it more attractive for the buyer by having more inventory, right? So they can choose from it, so prices can come down. We're hoping and praying, and especially with these fires, it just exasperates it as these inventory gets gobbled up by fires, right? We're seeing some of the largest fires going on right now, and it's just sad. It's sad, and we're hoping that the development and the California restrictions and streamlining the processes and making it more inventory is really what needs to be done, however that might be done. But we'll see. So all that being said, we're also going to be chatting about freedom from capital gains tax. In fact, deferring capital gains tax on highly appreciated homes, using what's called a deferred sales trust, not a 1031 exchange. So Rebecca, what's the biggest challenge you're seeing with perhaps some of the clients that you serve, or some of the folks in the Tahoe, Truckee area, Incline Village area, where they've owned property for a long time, it's highly appreciated, right? And they're looking at capital gains tax on the sale of their primary home, and they're not sure what to do.
Yeah, so they're struggling really with knowing how to deal with those huge capital gains in California. Even if you're selling your primary home and you're able to use, what's called the 121 exclusion, and if you're married, you got that $500,000 exclusion. But with the market the way it is, how the prices have just skyrocketed, all of a sudden you have $1 million or $2 million or $3 million in equity in your home. And if you're looking at then wanting to sell it, the capital gains tax can be huge. It could be 35, 40% of your equity in that home. So, and then people not wanting to do a 1031 exchange because they don't necessarily want to buy another rental property. So there's some big challenges, and I think the Deferred Sales Trust is probably the best option for them at this point.
Yeah, that's what we're seeing. We closed about 7 of these deals in the past 40 days, and we'll close about another 7 in the next 40 days. And one deal story that comes to mind is for a client of mine. She's in her 70s, and she had owned this property for over 25 years. And it was, I don't know if you've ever been to Santa Cruz, but it's in a place called Aptos, just south of Santa Cruz. And first it was a primary home for the family. Then the kids all got older and moved away, and then it became an Airbnb rental, right? And so she's owned it, and it's done fabulous. In fact, she bought it for around like $985,000, and it basically fully depreciated. And then it was being sold for about $8 million. Okay, so you had this huge gain, and then not a clear plan for how to defer the tax, or like what you said, not wanting to go into more toilets, more trash, more liability, but wanting to be able to retire, to diversify, to pay off debt. She had a couple $1 million of debt on the property. So she's very skeptical because she's only done 1031s all her life. She hasn't heard of this thing called a deferred sales trust. By the way, it's not a Delaware Statutory Trust. And so she actually has a really smart son who's a financial advisor who's been in the industry for a very long time. So she has him call me and our team, and we go through this whole thing, and his CPA, and I mean, really a couple months of solid due diligence. And they found that, hey, oh my gosh, this is 100% legal. It all works. But the biggest thing is that it solved what the family was looking for, which was not overpaying for a 1031 property, was not having more toilets, more trash, more liability, more debt, right? In other words, preserving their wealth and putting themselves in a position for the family to pass the wealth on, and not have as much risk during her older years, right? So that was the outcome. Really great. And then we did another one in a primary home, and this is where folks go, wait, doesn't a 1031 not work for a primary? We're like, you're right, 1031 does not work for a primary, but a deferred sales trust does work for a primary residence. And he had lived there for over 15 years. Okay. And the property, it was in Palo Alto, Silicon Valley, had appreciated to around 8 million and had a big gain. And for him, he was looking for a way to defer the tax and not be caught with, not being able to sell. And so those are examples of how the deferred sales trust works. By the way, you can reach out to Rebecca if you're watching this right now, especially if you're going to be selling anything in the Truckee, Tahoe area, to learn more about that. That's RebeccaMonson.com, RebeccaMonson.com. So Rebecca, I know you have a story too of even yourself, right? That comes to mind for you and your husband who were selling. Why don't you tell us your story and the struggles that you went through there?
So, my husband's a builder, and so we typically build homes, live in them for 2 years, take advantage of the 121 exclusion. And then so far we haven't had more than the 500,000 in capital gains. So we did that last year in 2020, and then moved into the next home. And because of the way that the market's just been gangbusters, we moved into that home and thought we should, let's take advantage of it. So we went to sell, and since we hadn't lived in the home for 2 out of the last 5 years, and we had over $1 million in equity in the home, sold it, and basically, had to pay $350,000, $400,000 in capital gains. And we wanted to be able to use the money again. Since it was a primary home, we couldn't do a 1031 exchange, wanted to buy another lot, build another house. So yeah, lost out, a third of that gain to the government.
Yeah, it's gone, right? And think about this. We can now defer it and not pay tax. But another thing you just said there, you could have used it to build another house,
right?
Which, by the way, the housing crisis, right? That's exactly what we want to do. We want to unlock the capital to build more houses for more people, right? And so it's really a win-win-win for the IRS, for your family, for the person who's looking to buy another piece of property, right? And this is what these 401ks, IRS, 1031 exchanges, deferred sales trust. This is what they do. They give us the IRS gives us these codes, IRS tax codes, or really Congress, and then IRS kind of enforces them to incentivize us to do what they want us to do, which is create more housing, invest more in the economy, create more jobs, which creates more tax revenue. And yet that $350,000 has now been paid to tax. And it's, guess what? You and your husband aren't building another place, right? Or maybe you're not building another unit because of that, right? Or you could have built more. So that's kind of bringing that full circle to understand that, folks, you can buy and sell investment real estate with the trust, all tax deferred. Yeah. You can also invest in stocks, bonds, and mutual funds. The client in Santa Cruz, and as well as in Palo Alto, they're not developers and they don't want to be owning active real estate. Like, they're tired of that. They've done that for all their lives. And for them, stock market is a great place, for them, because they're deferring the tax. It's completely passive. It's in some of the biggest companies in the world. So the flexibility of the deferred sales trust is great. Any thoughts on that, Rebecca?
Oh yeah, no, exactly what you were saying. We are still developing, but we now have to borrow some more money, where we could have been able to definitely fully fund it ourselves. And definitely being able to diversify that money would have been a great option too. So completely agree with everything you said.
Absolutely. That's great. For our listeners, again, if you want to learn more, you can go and reach out to Rebecca, RebeccaMonson.com, and then we can set up a time for all of us to chat. If you're considering selling, again, even cryptocurrency or a primary home, investment real estate, or a business, all of the above, we're here to help you out, clarify if the deferred sales trust is a good fit for you. Rebecca and I are going to be back probably next week or the week after that, sharing more. And so look for more episodes to come in the future. And we so appreciate everyone's time today. And we wish you